time for us to begin with our next session. Let us learn more about the emerging trends in wealth management, navigating the challenges and opportunities of a changing landscape. For our session host, Head Fintech Sales for Startups AWS, we are joined by none other than Mr. Prashant Gupta. Let's give Mr. Gupta a warm round of applause. Thank you so much, sir, for joining us. CEO and founder of INDMoney, Mr. Ashish Kashyap. Co-founder Upstox, Shrini Viswanath. CEO Kotak Mr. Srikanth Subramanian. Chief Business Officer Grip Invest, Vaibhav Laddha. Let's give Mr. Vaibhav a warm round of applause. Founder and CEO INDMoney, Mr. Mukesh Kalra. So with that, being on time, Mr. Gupta, over to you to take it forward. I hope the seat alignment is fine for you. Perfect.
Thank you. Fantastic. Well, people are settling in. Let's start with introductions. So first, thank you so much, all of you, joining for this discussion. Would love to hear your introduction, a little bit about you, what your company does. But why don't you add it with something peculiar about yourself, something outside of work, which is interesting. So I will start with you, Ashish.
Okay, my name is Ashish Kashyap. Good morning, everyone. I hope you're all awake. I'm the founder of a fintech app called INDMoney. It's a investment and wealth management application. We take pride that we enable you to manage your money seamlessly across different categories of finances. Outside of work, what do? I play a game called squash, which I love. I play 3 to 4 times. Other than that, I party hard on Saturday, Sunday. So I work very hard and party very hard. So if you guys want to go out with me tonight, welcome.
That's a generous offer, yeah. Can you hear me? No.
Hello? Okay, great. My name is Shrini. I'm the co-founder of Upstox. We're a stock brokerage firm. We've been around for over 10 years. I remember when we first started and we had to get customers, it was a lot about calling people, getting them to come to our office, sending forms here and there. And I'm just so proud that where we were and what we've accomplished in the 10 years as a country, as fintech ecosystem as a whole, it makes me really proud. Today we have over 10 million customers. Everyone opens all their accounts digitally. Everyone comes from all parts of the country. It's a complete transformation from where we were in 2012. And something peculiar about myself. Well, I grew up in over 3 continents, well, 3 to be exact. I was born in India. I lived in East Africa for a bit. And I finally did most of my education in the US before I came back about 12 years ago to India to start Upstox.
Hi, my name is Srikanth. I run the fintech platform for Kotak Mahindra Bank, a platform called Kotak Cherry. The whole idea is to bring years of experience that we've had in Kotak in terms of managing investor wealth, disseminating using technology. Kotak Cherry, as of now, has more than 300,000 customers, and we intend to build not just a single product focus app, but hopefully try and cater to a larger digital wealth requirement for most of the investors in India. We, in the bank, already have about 40 million customers, so that's a good starting go-to point to solve most of their problems. And while doing that, we intend and hope to solve for many other investors looking for a single place to have their wealth managed. As I transcended, for the last 2 decades, I've been a private banker running one of the larger franchises in India. As I transcended from a suit boot to a t-shirt, one of the things I had to do is to drop 25 kgs to be able to fit into a t-shirt. So I try to take this opportunity in every forum that I go to. That one thing about myself is very recently I took into fitness in a big way, and like Ashish plays squash, I play a bunch of sports myself, football, tennis, pickleball recently. And yes, in the last 2 years, I've dropped about 25 kgs, all in a healthy fashion.
Fantastic.
Okay, I don't think I can beat that. So I'm Vaibhav. I'm the Chief Business Officer at Grip Invest. In my past experience, I was in the US, and in about around 2014-15 is when my tryst with early stage companies started. So I worked at and scaled early stage consumer businesses, but also ended up working with a lot of financial ecosystem, be it venture capital, venture debt, private wealth. And at Grip, it is kind of that convergence where we are doing the financial innovation, but also on the other hand, has that consumer behavior, or in this case, investor behavior on the other side. At Grip, we are building the largest alternative investment platform. So on one hand, it is investor first, fully tech-driven platform. But on the other side, we are also the first platform to bring rated, regulated products on the platform for the investors. We'll talk about it more. Something peculiar. So I'm a big fan of night trekking, and it is peculiar because I hate day treks. But I've done night trekking in different countries across the globe.
Nice.
Hello, good morning, everyone. I am Mukesh, and I'm the founder CEO of INDMoney. At INDMoney, we are probably India's largest platform for long-term wealth creation. We enable consumers to invest in mutual funds where we do close to 800 crores of new investments every single month. We enable users to invest in fixed income product of FD. We recently launched a product called Genius, which gives you recommendations, and it's probably India's largest wealth subscription product in India. And it's been a great run. We have been at it for almost 8 years. We are perennially excited with the opportunity that India is continuously offering. If the very fact that the scale of GFF actually showcases you the opportunity that is coming in in all spaces. I think there is a lot to do. We believe that wealth is still in embryonic stage of its evolution in India, and we are very excited by that. And very peculiar to me, I used to actually, not going by my size, I used to play football, but then startup happened. And after my son was born, and now he has actually got me back into football. So at any point in time, you want to discuss, any transfers that are happening in what leagues, which player, all that, and I'm okay to get up at 6:30 in the morning to watch a match of Inter Miami, which is not even like a famous club, but Messi's there. So that's very different, and it's a big change. Kids bring a lot more back as your childhood. So that's very exciting for me. Thank you.
Fantastic. Thank you so much, everyone, for giving your introductions. So all of you from wealth tech, right? And Mukesh said that's just in embryonic stage. While it has been growing 44% year on year, there's a lot of headroom, right? Just an example, there are more than 300 million bank accounts in India, only 30 million investing, right? So question to you, Ashish. While there's a fast growth, but there's still a lot of headroom, what are the key things to happen to tap into this market which is still not covered?
Yeah, I think, when I look at it, it's really simplicity and democratization. How do you make, people who are really passive or on the fence, they have money in their savings account, how do you really make it easy and kind of even passive for them? And there are a couple of things we do as a company. One is we've really introduced unique innovations such as micro saving, mini save, where you spend, because we also integrate with all the account aggregators on your financial dashboard. You're spending on every spend, your change is getting rounded up, and now that money can be put behind any of the stocks or mutual funds. And that's pretty massive, because the people who started saving today, they save tomorrow, they save third day, and new people join. And that's massively compounding. So, I just feel that the way Invest Tech was looked at was there were these terminals which you wanted to bring to a mobile app. We are just reimagining that entire thing. And that's the kind of massification that needs to happen. Luckily, we are obviously, emerging in this era, and we didn't kind of launch 8 years or 7 years ago. So we also don't have any prior customers. So we need to think afresh. So that's, of course, the big advantage. But my sense is that, in this room, of course, the penetration would be great, but you go outside this room, as in outside this geo center, and you ask people, how many of you are investing? The penetration is low. And the reason is not that they don't have money in the bank. The reason is there is just too much of cognitive load. It's just too hard for people to understand. People hear each other, acha wo stock khareed lo, etc., which is absolutely wrong. Investing is very different from trading. And those are the experiences we're trying to build so that it becomes massively compounding and passive for users.
Fantastic. So basically, you are helping people make those decisions which might seem difficult for them and getting them into the habit of doing investments, starting small. That's micro investment.
See, investing is compounding. And, can you just basically enable consumers to compound every day? And, passively. They're, of course, engaged with the platform. We want them to engage. We want, the golden MAU number and DAO. For the uninitiated, MAU is equal to monthly active users. DAO's daily active users. But really, it's about a very different persona from trading. There are two different animals altogether.
Fantastic. Thank you. Shrini, what do you think about what needs to be done to get this larger market into investment?
So I think we've done a fantastic job in the last 10 years to able to get that number up from where it was. A lot of credit for that goes to, of course, platforms making it easier, cheaper, faster, more convenient for people to transact. And the second big explosion that happened was the rapid proliferation of mobile phones, cheap mobile data, that actually enabled a lot of people that didn't have that access before to get that access. And that's not just access to brokerage platforms or trading platforms, but also access to content, regional content, financial content that they didn't have before without the luxury of having a local branch of some sort, right? And that second part, to me, is actually a little bit more key because that's some part of it is where the financial literacy comes in, and it comes in indirectly, right? It was not a push from any bank, brokerage, fintech to say, let me educate you about trading or investing or why it's important to you. It's just an innate demand that people had, right? Like Ashish mentioned, people have money, they don't know what to do with it. You've come out of college, you've graduated, you have a job, you have money, you have dreams, you have goals. How do you bridge from where you are here to where you want to be, right? So that first jump that we've been seeing is people doing it on their own, right? The do-it-yourself investing. One of the things that we've tried in the past 2 years that we've seen a lot of success is actually starting to host workshops, education seminars, online and also in person. And we've seen sort of the powerful effect that can be there when you teach someone how to invest or even answer why they should invest, right? Because that's the first fundamental question that people have, right? People want to make more money, but they don't know how to do it, right? So when you start focusing on, let me improve financial literacy, let me teach people and answer the question why and how, it can be a massive, massive benefit, right? And I think innovating in that space, finding a way to distribute financial literacy in innovative, cost-effective ways that can reach to everyone, I think that's going to be the next explosion that's going to get that number from 30 million to 300 million, right? And that could be a lot of out-of-the-box ideas. We've all been focused on going out of brick-and-mortar stores and going more into online. So maybe we should rethink that model and say, does it make sense to open offices in tier 2, tier 3 towns that focus on financial literacy? Maybe that's something that we can try.
One of the things that we've done, because you talked about financial literacy, is a feature called INDLearn. I don't know how many of you have tried it. It's essentially a gamified way to learn finance in bite sizes. And it has been massively embraced by hundreds of thousands. So if we were a ed tech, perhaps we would be the largest company, but of course there's no fee that we charge.
Fantastic. So you talked about financial literacy. Mukesh, how about you? What do you think that what needs to happen? So we talked about financial literacy is one of the levers, the changing the habits of the people. What is INDMoney doing, and what's your view?
So, on similar lines as, as Ashish was mentioning, I think COVID and everything actually put a lot more into the minds of the consumers that, savings, keeping money in savings account is a sure shot way of losing it, right? So it's very counterintuitive when you talk about it, but it's very, very true, right? Because inflation is actually higher and all that. So I think at a very mass level, that awareness has clearly come in. And everybody has played a role, from fintechs to, content creators to, everybody has played that role to make that awareness happen, that no point in keeping money in savings account. Now, what we need to figure out is that transition of $1.2 trillion that is lying on savings account and low yielding deposits into the capital market, participation, into stock markets, or in that sense, capital markets. And we believe that that's the level of impact that can be created by actually first simplifying. I think simplifying onboarding itself was one way where it took earlier, as Shrini was mentioning, it used to take like a lot more time, documentation to start investing. I think that simplification is a great enabler. Like one very tangential idea that we keep on kind of talking to regulators about is that if there are 300 million accounts, can we enable all of them to start investing without the KYC? Because the KYC has been done by the bank, and if it is recent, right? Why can't that actually be, we suddenly remove the friction from the whole ecosystem itself. And then there is a lot more that, fintechs like ours, all the fintechs in the wealth space has done to really help users figure out, if you have savings, where do you actually want to invest? What are the options that you can invest? And I think that is one area we keep on kind of, really wanting to figure out a way which helps. So coming to that awareness, can we convert it into a real intent to invest by simplifying decision making? I think the access problem from a simplification perspective is done, but simplification from investment decision point of view is actually like a big unlock in the future. And with so many products being also bought, the decision, investing decision is becoming harder and harder, right? So if you have a 2 lakh portfolio, even if you want to remove 10,000 rupees from that, there is no easy way to do it because there are consideration of performance. So I think there is a non-linear explosion in terms of how a user needs to, take decisions even after the investing journey started. So I think these are 2 or 3 areas which can really blow the whole, industry up in terms of, access and everything. I think those are few quick thoughts.
Fantastic. So you talked about this mass of 300 million bank accounts which don't have KYC done, that's why they cannot invest, right? But if you see the larger chunk of this mass is in tier 2 to tier 5, right? Where banks have upper hand because they have been there, their branches, they're connected to people, right? Which gives them advantage of distribution and low cost of customer acquisition, which is a lot higher for any fintech, right? So the question to you, Srikanth, is what are the differentiations in terms of offering between a bank and fintechs? And this space is ever changing. Who do you think will be winner in the long run?
Actually,
Controversial.
Actually, the number of times I get asked this question would be just one shot of how many jobs will ChatGPT replace, but I'm happy to answer. I think, look, it's a fascinating journey, and I can tell you because of from personal experience, I've done 20 years of what's called very personalized offline wealth management in the last 2.5 years. I'm trying to take my craft from the other side of the curtain to using technology to disseminate the same craft. The way we look at it in our institution, which is Kotak, is it's really not either or. I think when we use the word fintech, we believe it's equal measure fin and equal measure tech. I think where the established institutions sometimes get it wrong, and where some of the progressive startups using technology have completely got it right, is how they have captivated the user imagination, how they have and crypto for one, broking for other, payments another one. I think the use of technology to go after a completely undiscovered cohort of customers, how UI and UX can change the behavior of an investor, how gamified approaches can actually bring customers to do the right thing. And it's also very fascinating to hear all my co-panelists really talking about financial investment as a practice rather than a business. And in our trade, that was one thing we always used to say, that an execution business is a business, wealth management is a practice. At the same time, incumbents also bring in dollops of domain skills, dollops of intellect, dollops of experience from markets. And we believe certain knowledge industries, be it financial services, wealth tech, be it healthcare, be it edtech, certain industries where the heart and soul is knowledge will have to be equal measure of domain skills and equal measure of disseminating it through tech. I think one of the things that we've seen, some of us not getting it right early on before newer ways of tackling problems were brought forth, is that we would think that as long as we have a basic technology journey built through an outsourced vendor, we would go and do a big ATL campaign. But what is the use of an ATL campaign if the journey itself won't work for the customer? So some of the things that we do in Cherry, for example, is that the entire journey of Cherry, and we are going to unveil our app in the next 15 days, so I hope everyone will get a chance to look at it, is all inbuilt. All the technology team, all the engineering team, the back-end team, the front-end team, the design team is all in-house to the team of Cherry. So, which also means that the control of the destiny of journey is not given to someone else, but the journey is being built in a manner that it can be seamlessly worked upon. So the way we are trying to work is we are trying to get into all the right things that the technology companies have done and add our own overlay of how to demystify markets at different points of time. And we were just discussing before this show, Prashant and Mukesh and Shrini both were chipping in. I think one of the things that we feel it's very commoditized, and a lot of people ask me this question, that isn't mutual funds a very commoditized market? I think the only part that is commoditized is the how to do it part, because execution, as many of us have discussed, is truly revolutionized. What is still to be demystified and deconstructed is the what to buy part, and I think that is something that many of us will try to solve for it. And if banks, with their reach, with their trust, and with the right embrace of technology, and tech-first companies with their embrace of right domain capital, we can both get it right as a golden mean. The end winner is the consumer, and I think that is what we should all be rooting for, rather than whether the winner is the bank or the technology companies, and that's the way we look at it.
Fantastic. You made it less controversial by making everyone winner. Thank you. Well, what about you? What do you think on this line? What's the key differentiation and who will win?
Yeah, you're re-emphasizing who will win part. I get that. Yeah, like as Srikanth started with, right? Technology is the clear differentiator. At least at this moment, it is the differentiator. I think the way modern fintech companies think about tech on day zero, banks have still a way to go. I think on this panel, how we think about tech at Grip, how we think about tech is very different. But to banks' credit, I think what banks teach us is scale. How to think scale, how to think, and like when you think scale, you think distribution. You mentioned tier 2, tier 3, but I would say even tier 1, scale is something that we can always look at banks. And I'll just give you an example, like a small example, maybe a tangential one, but how many of us think about vernacular advertising, right? We are all English-speaking people. Even our companies are English-named companies, but when banks think about distribution and scale, they really get the pulse of the customers. So, yeah, like Srikanth was saying, I think that both sides can learn from each other and build onto one. Though I would just take another moment to say that GRIP is slightly differently placed because we are not just doing wealth management. We are manufacturing our own inclusive financial products, and that could be distributed by, other fintechs, banks, etc. So I think on the competition part, GRIP is slightly differently placed. I think we need distribution channels to distribute our regulated financial products. So I think we need all of them.
Thank you, Vaibhav. So, see, if you see, fintech overall India is growing very, very fast, right? It's going to be 1 trillion market by 2025. And one of the key reasons have been the regulators, the governments for that, right? Because if you look at schemes such as Jan Dhan, look at UPI, India is clear leader in that space globally. Now, while this have been the tailwinds for fintechs, the regulatory space also ever changing, right? It's one of the biggest worry. All the founders like you, the businessmen like you, always have what's new coming in. So, Ashish, question to you. What's your view on the regulatory space you are in? I'm sure that SEBI is not the only regulator you have to think about. This is a lot more. But also, how do you think that our regulators will change the shape of this industry in near future?
Yeah, I think, let me be honest, the Securities Exchange regulator is highly progressive. As a company, we are pretty impressed. And one of the things, as builders, as fintech founders, we kind of realize that it's not just our compliance team which needs to understand regulation, but our marketing team needs to understand, our tech team needs to understand, our product team needs to understand. Because just like, okay, let me give an example. Just like for Uber, there is a driver-facing tech, and then there is a consumer-facing tech. Same way for us fintechs, there is this entire view of the consumer-facing world, and then there is this whole regulatory and exchange-facing world. So we can't ignore it, and we can't say, "Acha, compliance team dekh legi kuch," right? Everybody needs to understand. So it's one very progressive. Every team member who works in a regulated fintech needs to understand. Otherwise, it'll never be able to scale. Otherwise, whenever inspection happens, the whole company will be in turmoil. So that's the first one. Second one is that what is the regulator saying? Let's understand the intent. The regulator is saying, number one, that listen, when you onboard your customers, do not onboard dead people. So do not onboard people who are stealing identity. So you need to have technology in place, you need to have authentication systems in place, so that you onboard genuine people with genuine identity, genuine addresses. And as a company, we actually invest a lot on KYC, and we believe, yes, because in India and perhaps other emerging markets and other markets, there is a lot of identity theft which happens. And the reason, to Mukesh, why we also looked at it, that why aren't we just using CKYC database or set aside to do KYC? It's because a lot of data is inaccurate, and as a regulated entity, what the regulator is saying, hey, it's your job to clean up the data in the government depository. So I think that's the first thing that they're saying. Second thing they're saying, don't make promises. Don't say, I'm going to give you 200% return. Third thing, ensure that there's no money laundering which happens, right? And we need to build technologies and tools within the app without making the journeys excruciating. I ask a lot of prospective product managers, how would you build a great KYC journey? And most of these guys come back to me and say, oh, it's excruciating, there's too much of friction, blah, 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 without really understanding the context. So I think that consumer education we need to do, and everyone, all constituents, consumers, internal team members, need to understand what the regulator is saying. So I think it's pretty progressive. Having said that, many times we do kind of get this bomb which is thrown at us, sometimes controllable, sometimes uncontrollable. It's happened to us, I'm sure it's happened to others also, which we need to contend with. So in your business plan, you need to build that unknown. You need to say, "Bhai, kuch bhi ho sakta hai, kahin pe bhi kuch bhi ja sakta hai," right? So that's something which you need to build now as a mindset, and you got to be strong about it. So I think these are the two things that we see from a regulatory framework point of view.
Fantastic. So you brought in fresh point of view from both regulators as well as fintechs, but also you talked about how they have helped and something what helped them challenge. Srikanth, what's your view on this?
Look, we've been in a regulated industry for a very long time, and both as a bank and as a wealth practice and now in Cherry. And I echo Ashish's sentiment. I think most of everything that comes out of the regulatory mindset has at least got its heart in the right place. Sometimes what ends up happening is, either it comes unannounced or it comes with very little notice period. But I think as compared to what we have done progressively by changing so much to do with onboarding ease, I think we can live with some of those issues. I don't see that as an issue. But what I'm absolutely sort of encouraged and fascinated by, we've already seen 2 layers of India stack being used so easy, right? The Aadhaar concept and the UPI concept. And I think most of us here are beneficiaries of both of that. One of the regulatory interventions that we are now awaiting, and SEBI is very clear that it will adopt, and I think it's just a matter of time that it becomes as rampant in SEBI-controlled companies as it is in RBI-controlled companies, is the whole adoption of account aggregation. And I think the power that it has and the overall philosophy of account aggregation as a concept is that data belongs to no one but to the consumer. And it's got a very powerful place in the regulation. I think account aggregation will also be one of those intersection between usage of technology and the right intent of regulation, which will start differentiating how many of us are going to really manifest our use cases towards. I already hear a lot of use cases around predictive uses, suggestive uses. And I think this is going to be very, very interesting to see how many of us are going to use account aggregation to throw the use cases back to the consumer. We, for one, believe one of the use cases that usually some of my colleagues always discuss with me is the best way to do it is that you tell the consumer that in a particular market cycle, he or she has always done that, and hence this or the other product should always pop up. Now, looks great, looks intuitive, but is that the right thing to do? Is that what you should do, that just because the investor always has a tendency to use, to buy small cap because small cap funds always do well? Should that be your easy go-to use case? Some of us are going to make that mistake because it's a very easy to solve use case. The more difficult to solve use cases, extend that a little bit and say, listen, last time a crisis hit, or every time you buy a small cap, it's not always ended in the right way. Small cap is just an example, so that I'm not quoted out of context. It's just a metaphor of saying that you could take that extra leg to do it exactly right by the consumer. And I think those kind of regulatory interventions intersected with right technology, intersected with right data science, I think this industry is just bound to grow. And for me, I'll be just waiting for equal amount of FIPs and FIUs from an investment ecosystem concept also. So I think we have nothing but awe in terms of how regulations have at least ensured that easy democratization happens in the world of investments.
Fantastic. So you talked about very interesting way of using account aggregator to personalizing the experience of the consumers. Shrini, question to you, is there any specific use case how using India stack? And is there any suggestion or ask from you to regulators?
I think India Stack has been a fantastic addition to the people, the country, the fintechs and everything, because it's made KYC, ease of transaction, just extremely easy to use and easy to implement for everyone. I think this account aggregator that's being built, that's coming out more and more, is going to get fintechs be able to deliver a much better end user experience. One of the things we're working on is we don't want Upstox just to be a place where you go and you buy and sell stocks or mutual funds, but it's a place where you can actually manage your wealth, right? What is your net worth? What is your profit and loss, right? How do you sort of measure that and give that in an easy to understand way and give you corrective actions to then make any changes? One of the top questions that we see from people who've made the plunge into investing, the first question they ask is, here's my portfolio, what do you think? How would you rate it, right? So these kind of things problems are some of the things that we're working on in terms of helping people understand how well their portfolio is constructed, how well their portfolio correlates with other assets, should they mix and match mutual funds and stocks, and maybe they own other assets that are not with Upstox. Can we bring all of that together and then say, this is a cohesive, holistic view of your portfolio, and this is how we can help you achieve your goals. These are the changes you need to make, right? So to get to, today we're at a very transactional level, I would say, relationship with the customer, right? It's very, what do you want to buy? You go, you pick, you get that done. We want to move towards a more discoverability, conversational view of that, right? And having things like account aggregator will give fintechs much more data to work with so that we can better assist the customer with their end goal. So I'm truly excited for that. I hope more and more assets come under the ambit of account aggregator. And to echo my co-panelists, I hope that more and more also KYC or any other verifiable information will also come under the ambit of a single place. So it makes it easy for users to open accounts, switch accounts, whatever they want, give power to the consumer.
Fantastic. Yeah, go ahead.
So on the regulation question, if I can come in, so what we have realized, and if there are any new fintech entrepreneurs in the audience, what we have realized is that no large businesses can, in this industry at least, can be built by not being on the right side of the regulation. I think let me build something and we'll figure out the regulation later doesn't really work in this industry. And on that part, I think Ashish broke it down like beautifully on how, if you read a SEBI circular, it is not going to sound like what Ashish said, right? But if you break it down, it's so simple. What's the intent? What are they really trying to do? And at Grip, when we are now launching products, even thinking about products, we talk to SEBI, we talk to rating agencies, we talk to the National Stock Exchange. And these communication channels are not very hard. Like it's so intimidating when you think about it, but we have been able to do it. And yeah, we have seen that receptiveness in these regulators. Yeah, just wanted to add that.
Thank you so much, Vaibhav. Last question from you, Mukesh, before we end. Any suggestion from you for the new founders? Any suggestions you have? So Vaibhav made one, but any suggestion from you for the new founders?
So, I think number one, guys, I think every area of fintech is really embryonic stage. Like, I'm not talking about wealth, you look at payments. Everybody thinks that the game is over in payments, but there is someone who will always come in, do a full reset. You go to lending, there is someone who will come in, will do a full reset. Wealth tech, there have been resets every like 4 or 5 years, right? So the opportunity is really multiplying very clearly. Few things that you need to be, I think, while I'm not, believe in advice, because advice is has to be very contextual. But few things, one thing, clearly is that the opportunity is massive. You need to focus on one sliver very clearly. Otherwise, there is so much that you can do. You can get, swayed into a lot of things. For example, for us, while everybody was doing a lot more stuff, we just focused on mutual fund for 8 years. And compounding works, like we are talking of wealth tech, and compounding works in building business as well. We wouldn't have been at a 800 to 1,000 crore new investments per month if we wouldn't have kept at one single thing, wanted to be large at it. And to enable that, you need to build that conviction that this is the right, product for the consumers. Because we believe that long-term wealth creation is right for the consumers and it will be permanent, right? Like it's a permanent part of the portfolio. So I think that conviction building, I see a lot more, entrepreneurs not building. And it takes, I think, 6 to 8 months talking to consumers, talking to industry people, talking to founders, talking to build your own conviction on that idea. And the reason that I believe in deep conviction is that everything said and done, you are starting with, the odds are against you, right? There is only 3% chance of success in a startup. So 97, you are actually entering into a phase knowing that 97% of time you're going to fail, right? So if you don't have the mindset to keep at it and be open to actually, getting punched in the face and being open to actually, getting shocks again and again, don't enter, don't do a startup. All these are mindset things, but building conviction solves for these problems. Because if you have a deep conviction, you're possessed by it, obsessed by it, whatever you call it, you will power through all of it, right? So I think
Fantastic.
that's very, very important. Yeah.
Cool. Thank you so much, Mukesh. Thank you, everyone. Thank you for your time today. And thank you, one, for attending the session.
Thank you so much. Ladies and gentlemen, once again, a
Thanks,
big round of applause